And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family. It's time for the market forecasts. Thursday, December the 1st, 12th month of the year already. My name is John. Thanks for trusting me with your time. If you're in the markets, hopefully you've got things going your way already. I've rolled my sleeves up and I am ready for the trading day. One thing I am sure of is something is going to happen in these markets today, right? We certainly have some bigger opportunities possibly on the plate. We still have a lot of economic data due out. Big day yesterday in most of these markets. I'm really looking forward to getting into the charts and taking a look at the opportunities that we have today. As far as what we do here, our focus is always on good, accurate context, risk management, and being patient in our trading, which may be a bit of a challenge for all of us today to try and stay patient. I think we're all a little bit jazzed up and ready to jump in here, but make sure that you're taking the right opportunities. What the right opportunity is, that's for you to decide. As far as the economic numbers this morning, the jobless claims came out. We're looking for 235,000, came out at 10,000 less than that at 225,000. Continuing jobless claims, however, was a pretty big jump to the upside. 1,573,000 was what they were looking for. 1,608 continuing jobless claims. Personal income was a little bit higher than expected. Spending was just about as expected. At 8:25, we have Fed member Lori Logan due to speak today. Don't know if she's going to shed any more sunlight on these markets. Anything more than Powell did yesterday. 8:45, the PMI manufacturing index. 9 o'clock, the ISM manufacturing index, as well as construction spending. And 9:30, the nat gas number due out. So we still got a few little numbers waiting to come out. So we'll have to, of course, keep an eye on those. And, well, we won't really have anything during Make Hogue Money, but we will certainly see what we can find during Make Hogue Money. That's right after the recap this morning, about 8:20. We'll check the equities open. We'll see if we can find some opportunities together. Looking forward to seeing you all there. As far as what's going on, well, U.S. stocks have held yesterday's gains, looking to continue those gains to the upside after Fed Chair Powell's tilt towards smaller rate hikes yesterday. European shares have joined the party last night. Unemployment now is, of course, in the focus with the unemployment rate due out tomorrow. Jobless claims today. Unemployment numbers again due tomorrow morning. China is mulling loosening of COVID restrictions, adding to the current risk-on mentality around the globe. Also driving crude prices to a critical resistance area, weekly kickoff high. Looks like we are through that level now. We'll see if we can find some continuation. Again, looking forward to getting into the charts. There is much to discuss today. VIX is down a little bit, of course, down at 2050, pretty low number there. Dollar index also lower at 105 last I checked. And the yield on the 10-year also lower at 3.58. For the last couple of days, we've had 3.75. So the yield on the 10-year coming off a little bit, kind of hopefully not deepening the yield curve any deeper. Good morning, everybody. Shaw is first one in the room. You win the prize this morning, Shaw. Caprice, Theo, J. Spencer, Scott, Sonny, Conker, Jules, Terry King, the Rooster, good morning. Jimmy Decker, Naztec, Keith, good morning. Be on the lookout for the naked point of control in the S&Ps here at 4138.25. If we continue this upward move, it's a good pivot area. We're going to write that down 41.38 quarter. We know these markets love to revisit those visual numbers, right, Rooster? Bill Phillips, Serenity Trader, Caesar, Brody, good morning. Timothy Marks, Danny Ireland, good morning. Lots of snow in the Tetons this week for snow lovers. So far, 2 feet this week and another 2 feet through Friday, and it's only December 1st. Well, you are certainly blessed to be where you are if you are a snow lover, and I just absolutely love the Jackson and the Tetons. It's a beautiful part of the country. Joel, good morning. Anissa, Doji Candle, good morning. Sarah Hall, prayers and love to you as well. My brother Randolph is here. Good morning, Rick. Love you. Grim Reaper Trader, Alejandro, Spencer, Ricardo, Vince, good morning. JD Trader, interesting run this morning. It's going to be an interesting trading day. JNR, ZK, Glitter Sandwich, Omid, Steven, Jerry is awake. Great Dane, good morning to everyone. Okay, I think the question in everybody's mind and in the equities today is, are we going to continue to accept higher pricing? Does price need to continue to advertise higher to find sellers? Or is it going to reject higher pricing? We're going to find some sellers and pull back. We've got some bases of late spikes to pull back to for possible opportunities. Again, lots to check out in the charts. Sonny, good morning, with a quote for today. Good morning, Sonny. You can't control what happens to you. You can control your attitude, and in that, you'll be mastering change rather than allowing it to master you. Love the quote. Again, you can't control what happens to you. You can control your attitude, and in that, you will be mastering change rather than allowing it to master you. Brian Tracy. Great quote, Sonny. Bear rally. I don't know. There's some talking heads out there talking about how the Dow is now in a bull market. That's the Dow, certainly not the NASDAQ. And we've got some things to look at here, and for the S&Ps. George, good morning, and good morning to Rob T. All right, let's dive in because we do have a lot to look at, and we are looking forward to make Hogue money at 820 today. So let's start here with the E-mini S&Ps. So, what does VWAP measure? VWAP measures it's the price where volume is even above and below. It's the price that has the same amount of volume above that price as below that price. Yes, and certainly keep an eye on the dollar. The dollar is taking a look now down below an area of balance. I mean, this could continue to push to the downside. We were looking at the dollar. Well, it's a little higher than it was last time I checked, but still, it's not looking all that strong here today. So, all right, here's the S&Ps. Medium time frame structure is still to the upside. Look at the 200 session moving average. Here it is on the continuation chart. We're above it. Just about every time we've been above since April, where every time we've been to it, we've found sellers and we've rejected. Even as late as recently as last week, we're above it now. This is the 15% correction off the high, 40.86. We're now above that. Here's that back to that daily chart. So yesterday we added 34,000 in open interest. That's a pretty good jump in open interest. There's certainly most time frames acting in concert on price, pushing price higher in an imbalanced fashion. Volume was huge yesterday, maybe not necessarily in futures, but at the New York Stock Exchange, it almost doubled the volume from Tuesday. Okay, it was 81% higher as far as volume is concerned yesterday than it was on Tuesday. Over 6.3 billion shares traded on this push to the upside. When we're looking at the auction process, open interest and volume are part of it. We added open interest and we had big volume to the upside and a breakout above an area of balance that we've been in for a couple of weeks. So we've got the breakout of short time frame balance. There's rules based on that. When we accept outside of balance, we go with those moves. Again, looking at that at the continuous chart, the 200 session moving average, same spot really. We're above it now. We haven't seen that in a while. We've got weekly kickoff high 41.23, which is certainly in sights, and now we've got another spot to watch for. That who was it? Rooster was pointing out another naked point of control up at 41.38 quarters, so a little bit above our weekly kickoff high. So, of course, this swing high is going to be somewhat crucial to us if we get there. More importantly, looking at the 30-minute chart in short time frame, this whole move to the upside basically puts forth a late spike. What a late spike is, late in the session, price moves away from previous balance and can't find an area to balance in the regular trading hour session that day. So when we open inside the late spike or above, especially above the late spike, it's the highest probability of acceptance of higher pricing, and we're going to look to see this move continue to the upside. Opening in the late spike also states that we're still seeking balance. It's just a little lower probability for the continuation. And of course, opening below the base of the late spike would mark rejection of higher pricing. I don't think we're at risk of doing that here. We've only got maybe a half hour to go, and it looks like we're even going to be opening with a gap. So not only do we have gap rules, we have late spike rules. I'm saying that the base of the late spike is this red line right here. Okay, 40.44. Because this was the last week's high. It did a stutter step here. It was the naked point of control actually from Thanksgiving, and it's where the L period broke out above and then M period continued. So I'm really kind of focusing on this area here. If we do get a pullback to that level, to maybe throw a couple lines in the water or hide behind a bush, because there may be a gazelle or a zebra or a wildebeest walking by any time. So again, opening above the range from yesterday is the highest probability of acceptance of higher pricing. So last week's high is now somewhat important to us in the day time frame today, if we even get the chance to see price get down to that level. We fail there. We fail at the base of the late spike here. We may be looking at a deeper pullback. So I'm excited today. I love playing late spike days because it just gives you more nuance, more reference, and bigger probabilities, bigger possibilities many times. You know, this could be a big nothing burger today. We could just kind of sit up here and find our two-sided trade and range for the day. We don't know what's going to happen, but it just gives me, you know, a context that we are likely to accept higher pricing if we open above the range from yesterday. We've got that in several places in these markets today. Okay, so here's crude oil. All right, well, we have V bottom. We've been one time framing for 4 straight days. Open interest continues strong on the up move. Volume is off a little bit. So if we're going to be accepting above weekly kickoff high 81.50, or are we going to reject it? We got last week's high right in the way here. That's part of a possible resistance level that would allow us to limit risk. I'm going to give a 4 out of 5 as far as the auction health in this move to the upside, a 4. Not bad. Pretty good health in this current short time frame auction to the upside. Here's the 30-minute chart. No late spike. We have overnight inventory to the long side, holding above weekly kickoff high, testing last week's high. This whole area up here is kind of crucial for either continuation above last week's high or a failure at weekly kickoff high and a push back to the downside. There's plenty of visuals down below. We've got naked point of control here, yesterday's naked point of control. Plenty of visuals down below if we can't maintain price up here. But again, opening with a gap, which we just did, if we can't close the gap relatively early, then we'll probably take out last week's high and continue this move to the upside. NASDAQ. NASDAQ is a completely different situation. We were looking at the S&Ps, the percentage off the all-time high. We're at 15% today. We're still at 30%, between 30 and 25% off the all-time high here in the NASDAQ. We have a much more difficult time breaking out of the range that we've been in. We did take out last week's high yesterday. We did add open interest. We did have good volume, but now we've got this swing high. Okay, we're way beyond that in the S&Ps. The high of this swing high is 12,118.75. What's our high? 12,132. So we've looked above it. We have not yet found acceptance above it. So now we're also looking at a late spike. Okay, the NASDAQ is still so much weaker than the S&Ps. Look at the position of the 200 session moving average. All the way up here. Price in the S&Ps is above that. Look at how this 200 session moving average hugs this trend line on the way down. Fascinating. Here's the 30. Again, the late spike. Calling the late spike, in essence, the last week's high. It's where L period broke out and we saw continuation through M period. So this whole area here is the late spike. Are we going to open above the late spike? Are we going to gap higher? That's going to be the highest probability of acceptance of higher pricing. It doesn't mean we can just close our eyes and buy it. The market could come all the way back down to test this level before continuing to the upside. Anything, as always, can and will happen. So spike rules, opening above the spike, highest probability of continuation. In the spike, secondary probability of continuation. Below the spike, probability of rejection of higher pricing. The way things sit now, we are likely to continue or accept higher pricing. Gold. Lost 4,100 in open interest all overall yesterday, but we did add 2,300 in the February contract. Still kind of at the end of rollover. Open interest indicates maybe some short covering, but that's probably more rollover related than any kind of short covering. We did add, again, 2,300 in open interest on some higher volume. Of course, that volume is still coming in because of rollover, so it's kind of blurry and difficult to gauge the health of the upside auction at this time. What I do like is the fact that we're getting pretty close to testing weekly kickoff high, which in the February contract is 1809. It's the address of my first apartment. 1809 Lincoln Park West. So that's going to give us at least some reference and some opportunity to limit risk. Acceptance above it, we continue. Failure at it, we fall back to the downside. Take a look at the 30-minute chart here. Yeah, see, the Dow's only 6% off the all-time high. That's why they're saying it's back into a bull market. Here's the Gold yesterday, okay, I am basically saying we did put in a late spike yesterday. This market closes at 12:30 Central Time, but because of the extended volume that occurred after that, because of Powell, I'm adding this to the regular trading hours. So the high here, 1779, I'm calling the base of the late spike. Well, I don't think there's much of a chance of us opening below the late spike or even in the late spike. We are seeing continuation to the upside to a test of possible resistance in longer time frame. Again, that 1809 level. This complicates things a little bit because we've moved so far above the base of the above the late spike. It's going to be hard to buy, but it may be the right thing to do. Watch that 1809. Watch the dollar. See if we see a bump in the dollar as we get close to this 1809. There might be a downside opportunity. But if you do take it, I don't want you falling in love with it. It's going to be a fast trade. It's going to be something that's where you're going to get a pullback off of this. You're going to cover that short, and you're going to look for your next opportunity. This market looks very strong. That said, markets love to make a liar out of me. All right. Here's the euro. Okay, well, now we're finally getting some continuation. We did add 4,300 in open interest. That's new longs. We were still range bound as of 7 o'clock this morning when I was looking at this. We are getting a breakout. The dollar is presenting as weak. Range bound rules. We fade extremes. We go with breakouts that show signs of acceptance. Are we showing signs of acceptance here? I would go with yes. Weekly kickoff high, which we are now above, is pivotal to continuation, of course. And that's also last week's high. So another late spike. We've opened above the late spike. We've opened now above an important inflection level. Look for this market to continue this move to the upside. You get a pullback to this level, it's a nice opportunity. But don't forget, the price can always come back to the base of the late spike, which is right here, 1306. I'm sorry, excuse me. Wrong. 104.18 and a half. 104.18 and a half, right here. That's the base of the late spike. It can come all the way back there and still maintain its acceptance of higher pricing. I don't necessarily see that happening. Now we get to the 10-year. Okay, another breakout of balance just today, just now. We lost open interest yesterday as part of rollover. We lost 69,000. Oh, it's 38,000 of them in the March contract. So we still lost open interest in the DEES and the March contract. So this is more like short covering than a real buying opportunity to the upside. But that doesn't mean that it's not going to force the other hands of traders to start to buy. The short time frame upside structure now remains intact. We've broken out of this area of balance. Here's the 30. All right. So a lot of short covering in this yesterday. Okay. A lot of continuation. We also had a late spike. Not a big probability of opening in or below that late spike. We're looking at continuation. Last week's high could be an interesting level for an execution if we even get the opportunity. And on to the natural gas. We had a lot of short bets come in yesterday in the natural gas. We added 5,500 on a down day with a double distribution trend day. I think they're maybe a little bit trapped. Do you think this may end up kind of presenting as a bit of a bull flag if we can break out above this trend line? Here's the 30. Here's our double distribution trend day from yesterday. Balance, imbalance to balance. We've kind of opened in the area where I would look for the possibility of repair to the high volume nodes here, but it looks like it's having a difficult time in doing that. I'm probably going to remain patient to see if we can get a pullback to point of control, our overnight low, before looking for an opportunity here. I still think with the double distribution from yesterday, here's the early balance. We opened here, and the lower balance that has a tendency to try and check to an assumed point of control here and an assumed point of control in the lower distribution. So I'm going to be cautious about that. So there was a question. Not from girls. I think I just saw it. L and M periods. Andrew Bowden. Andrew, those are periods of time related to the market profile. So here is where that comes from. Okay, here is yesterday's big move to the upside. If I spread this out, each price is given a letter. Here's J period. It's probably kind of hard to see. J period continues the move to the upside. We get K period here. L period, we get a little bit of a area of balance here. So it's the base of L right here, 44 quarter, where the base of the late spike is. Calling it the base of the late spike because M period is all the way up here, and then the market continues to move higher if this is the base of the late spike. I mean, both of them can possibly work. Hey, Fred, you got plenty of love here, man, my man. It's good to see you. Hey, Fred, I've been looking for you. I don't know if you remember from back in the early days of Top Step, Frank Solozzi. Frank Solozzi was around the last couple of days. And it resets every day, Andrew. Yeah, so, here's last night's profile. Here's yesterday's regular trading hour profile. The night before last profile. The day before is regular trading hour profile. Every day it starts at A on the 8:30 Central Open and ends in M period. All right. So we do have a very interesting, very challenging, and hopefully profitable trading day. There's a lot of nuances and contexts that are right there in front of us. This week I thought was kind of tough as far as looking at the context and what the ruling reason would be for any trade I was going to take and the nuances. Found it a little bit difficult to seek those out this week, but now the market has given us opportunity, and the idea that with the late spikes, with some of the gaps that we're seeing, and the fact that some of these markets are pretty close to weekly kickoff levels. So it's going to be, again, an interesting and interesting and challenging, and again, hopefully profitable. Yeah, Frank, Fred, it's okay if you don't remember. I mean, I spoke to him a lot. Boy, the very early days of Top Step, Fred, when you were here, thought maybe you might remember him from the chat room. I don't remember his chat. But maybe we can hook up today and make Hogue money or another day. Yeah, those are based on floor time brackets. It was part of the paper trail for, so that the exchange could kind of keep track of when all these things happened. After a while, they reduced them to 15-minute time brackets. They wanted more of a paper trail. Of course they did. All right. Let's take our deep breath. Stay humble, grateful, and creative today in your trading. Be good risk managers. Okay, Fred. We will see you shortly, hopefully, in Make Hogue Money. That's going to start at about 8:20, so I'd better get busy getting ready for that. And it's going to be an interesting one today. We certainly have the markets offering potentially bigger opportunities. So hope to see you there. If I don't see you there, have a great trading day. We'll have the recap at the end of the day so we can reflect on what did happen today. And then tomorrow is Friday, so just the forecast tomorrow, and that's going to be it. So get out there and profit today. Trade well. Be good to yourself. Be good to others. Keep praying for world peace and peace in yourself. Trade well today.